We went dumpster diving here at River1 Asset Management. I looked at the 52-week low list to see if I could find something with a lot of value in it, and one thing that popped out that was really interesting is Oracle. Let's take a look at the ride that Oracle has been on over the last year. Peaked out here at $328 in September of 25, and then headed straight lower, had a little reprieve here in June up to $250. Now it's back down at its 52-week low, $120. Let's go through what's going on at Oracle right now and what we think about the future for this company. So Oracle decided to make a major shift in their business model. Instead of just being a software provider, they decided to build AI data centers for the likes of Google, Microsoft, and OpenAI, right? And they have a massive CapEx bill that they have to pay in order to get these data centers in the ground. But what these companies are promising them is a future revenue stream that is really good. In fact, they are bragging about $550 billion in backlog. Compare that right here to their current revenue of $67 billion. So obviously it's a really big deal that people are going to pay them a lot of money in the future for their CapEx. But what's the problem in the near run? Take a look at the negative free cash flow. They're going to do $100 billion in CapEx, and they're going to spend $45 billion more than they're making. What does that mean? It means they have to go raise debt and equity so that they can pay this bill and build those data centers out. So is Oracle cheap down here at $123? Well, if you believe the model, let's take a look at what Bloomberg is saying it could be. $67 billion in revenue goes to $222 billion in revenue out in 2030. Massive growth. The EPS goes up quite a bit too. $20 in EPS. Let's take that 20 EPS and multiply by a 20 PE. Very fair for a company that's doing well and growing. That's $400 right here. Compare that to $123 for Oracle, and you've got a lot of value waiting in this if you believe this model. But let's take a look at the other side of the coin here. Oracle has to build all this CapEx out, and it is very similar to what AT&T had to do back in the 2000s. AT&T spent $700 billion in CapEx to build out cell phones and the structure for Apple. Apple took most of the money. AT&T stock has gone nowhere. It pays a 4 to 5% dividend, and it goes nowhere because they are under a massive debt pile. That same thing is happening right here in Oracle. $172 billion in debt and counting. They're going to have to borrow a lot more money if the return on these data centers isn't enough to pay down this debt. Shareholders are likely going to be stuffed underneath that debt pile, which is going to be a difficult place for them to be. So Oracle does look cheap, but you really have to believe these data centers are going to be paid for and be paid for well by the likes of OpenAI. We're not sure we're on that side of the coin yet. We need to see more data, especially with people walking away from these data centers as they have been recently. At River1 Asset Management, we do have a morning note. The link is in the comments. If you want to see what we're doing on a daily basis, please subscribe. We'd love to have you. If there's anything else you guys want to see, let us know.